An update on Bitcoin cryptocurrency here off the hourly interval. Here we have this primary channel off this primary trend line. I had mentioned in my previous video on a snap of this primary trend line off the mid-May lows would offer objective short trade entry and or sell signal to get out of your longs and dollar cost average here, and that's exactly what we did here. We sold off really briefly, down for a 9.2% correction here. What had happened is we hit my first target here, came back out, got rejected right off my 29,317 resistance, back tested twice, got rejected really impulsively off of that, came back out and tried to test my 28,702 resistance, back tested it twice and got rejected very impulsively off of it. There's no reason why you should have got out of your longs. If I had mentioned yesterday this primary downtrend line, one of these secondary downtrend lines that I had mentioned, I have just added the secondary downtrend line, but a break above this primary downtrend line would have been bullish, and we are going after it now. We put in a divergent low. We do have RSI divergence. We do have a crossover here on the MACD, and they're going to gun for their zero lines now. We have this dual resistance. I've added this new secondary downtrend line here, coinciding with the 28,288 resistance, and you're going to want to see a break above for things to get bullish. Now, things to get really bullish, we got to take out that 28,702 resistance, coinciding with that primary downtrend line here off the mid-June highs there. Plenty of continuous reactionary highs to help validate that as well. But this is your updated targets. I have added new targets in case you did take this short and you're looking for a break of these lows. If you want to gun for the home run right now, right here, and you have not closed out yet, I've added more key levels here on the daily interval, off the daily interval here, and we have a 23,830. 22,765 and then a 19,489, and a snap of that we'll probably have a revisit to 17,000 zone off the primary trend line, really off the Mt. Gox crash lows. I believe that's where it comes from. So again, head and shoulder, and here we are. We're breaking down here. This could happen really quickly. It could happen fast. We got to take out these previous lows here, which will be 27,073. Once we take that out, I truly believe that'll be another enacted sell signal, and then we'll start to hit some of these next targets. In my opinion, we'll burn out any potential divergence. We have a steep negative divergence here now on our side divergence. We have a potential looming crossover here on the MACD and oscillator, gunning and an overshoot momentum overshoot over its zero line, right down back below. And again, that would sell for a sell signal. Once we take out and undercut the low, we undercut the lows there. Like I said previously here at that 28.49, call it 26,578. Once we take out the low, undercut those lows, I got next targets here for you: 23,830 for a 14.92% drop, 22,765 for an 18.7% drop, down to 19,489 for a 30% crash, down to the revisit of this primary trend line for a 36% crash. So we'll see what happens. Anything's possible. And again, hey, if you're bullish, you want to be very careful here. Here it is, really off the 2015 lows, plenty of continuous reactionary lows to help validate that, especially off the COVID crash lows. So we'll see if we get it. We'll see. Keep you updated if I see anything new development. And again, the evening doji star that I had mentioned in my previous video is starting to play out here now. We had that falling three method looking pattern. Boom. Impulsive rejection, sell signal, broke this primary trend line, never looked back, consolidated, put in this bearish continuation evening doji star pattern that I had not seen anybody else catch here on YouTube, and we are starting to break down off this symmetrical triangle pattern here, burning out this divergent low, crack below this little small minor trend line support, and here we are sitting right briefly below it. And those are the next lows to take out. You take those lows out, there's going to be some panic. We could get a potential bear flag continuation pattern here, and this is where you want to measure the flag. It's definitely one of the most ugliest flags I've ever seen, but you want to talk about measurement and key measurements here off that 28%. 28%, that'll get you exactly to that 22,765. I mean, you want to talk about a key risk reward ratio. That's your spot right there, 22,765 on a perfectly awkward and not aesthetically pleasing bear flag continuation pattern, right down to that 22,765 and a potential shocked out. So we'll see what happens. Keep you updated if I see anything new. Hit that like and subscribe button if you enjoyed the video. Let's go.